What's up, Bitcoin Bulletin crew? Get ready for some serious news that's shaking up the crypto space. First up, we've got the DC Attorney General Brian Schwalb dropping a bombshell lawsuit against Athena Bitcoin. This isn't just any lawsuit. It's about allegations that Athena's ATMs have become a playground for scammers, especially targeting our older adults, and the company has been raking in massive hidden fees while looking the other way. We're talking about people losing their life savings, and the AG is fighting back. Next, hold onto your hats because a major security scare is unfolding in the JavaScript world that has direct implications for your Bitcoin. We're talking about an NPM attack where a compromised developer account, specifically developer kicks, was used to push malware. This malicious code is actively hunting for Bitcoin wallets on user devices, and it's designed to hijack your transactions, rerouting your precious crypto to the attacker's own address. We'll break down exactly who's at risk and what you need to do to protect yourself. Then, we're shifting gears to look at the bigger picture. Prepare for an in-depth analysis of how both the Bitcoin and Ethereum ecosystems are maturing, especially in light of a more favorable regulatory environment. We'll explore how institutional adoption is shaping Bitcoin's landscape and what surprising indicators are emerging for Ethereum, even as it faces some debate among analysts. Is this the dawn of a new, more stable era for crypto? And finally, we're circling back to Athena Bitcoin with a closer look at the lawsuit filed by DC Attorney General Brian Schwalb. This deep dive will uncover the specifics of how Athena allegedly profited from scams that targeted vulnerable adults and failed to disclose exorbitant fees, leaving victims devastated. Stick around for all the details and our expert analysis. Don't forget to like this video, subscribe to Bitcoin Bulletin for all your crypto news, and ring that notification bell so you never miss an update. DC Attorney General sues Athena Bitcoin over ATM scams targeting seniors. This is a massive development in consumer protection within the crypto space. The District of Columbia Attorney General, Brian Schwalb, has launched a significant lawsuit against Athena Bitcoin, accusing the company of actively profiting from fraudulent activities that prey on older adults through its Bitcoin ATMs. This isn't just a slap on the wrist. It's a full-blown legal battle aimed at recovering funds for victims and stopping predatory practices. The core of the allegations is that Athena Bitcoin has been aware that its ATMs are being used as a conduit for scams, particularly those targeting the elderly, yet has continued to operate and profit from them. Reports indicate that one individual lost nearly $100,000 in less than a week by using Athena's machines, with victims losing a median of $8,000 per transaction. The lawsuit claims that undisclosed fees, some as high as 26%, allowed Athena to pocket millions, while an astonishing 93% of all deposits made through their ATMs in DC were linked to scams. Scammers, often posing as bank or government officials, would pressure victims into depositing cash into Bitcoin ATMs to supposedly protect their money or aid in investigations, exploiting the irreversible nature of crypto transactions and the lack of intermediaries. Assistant Attorney General Jason Jones highlighted how crypto ATMs offer a smoothness for the scammer that gift cards or other methods can't match, as the funds go directly to the scammer with no chance of recovery. The Office of the Attorney General's investigation revealed that Athena knew its fraud warnings were ineffective, allowed scam-linked wallets to remain active, and profited from the fees generated by these fraudulent transactions. The lawsuit accuses Athena of violating consumer protection and elder abuse laws by failing to prevent scams, charging hidden fees, and refusing refunds. Records show that nearly half of deposits in Athena's first 5 months in DC were flagged as fraudulent, with the company allegedly failing to disclose its transaction service margin, which could reach 26%, far exceeding typical cryptocurrency exchange rates. Even when fraud was reported, Athena reportedly refused refunds or required victims to waive future claims. The median age of these victims in DC was 71, underscoring the focus on elder financial exploitation. This lawsuit has ignited a firestorm of discussion online, with many praising the AG's actions, while others debate the responsibility of ATM operators versus users. Analysts are pointing out that this case could set a precedent for how Bitcoin ATM companies are held accountable for facilitating illicit activities, especially when vulnerable populations are involved. The DC OAG is urging anyone who suspects elder abuse or fraud to contact them immediately. Don't go anywhere, because the fallout from this Athena Bitcoin news is just the beginning. Next up, a critical security alert that could put your actual Bitcoin wallets directly in the crosshairs of hackers. NPM attack. A compromised JavaScript library is targeting Bitcoin wallets. This is a cybersecurity alert that strikes at the heart of software development and could have serious implications for anyone using web-based Bitcoin wallets. A significant compromise has been discovered within the NPM ecosystem, a vital package manager for JavaScript, where a developer's account has been hijacked to distribute malware specifically designed to steal cryptocurrency. The developer in question, known as Kix, had their NPM account compromised. This compromised account was then used to push malicious code into libraries that are widely used by developers. The malware's insidious function is to scan user devices for cryptocurrency wallets with a particular focus on Bitcoin. If a targeted wallet is detected, the malware attempts to intercept and alter transaction data. Specifically, it aims to patch the code responsible for coordinating transaction, signing, and replace the intended recipient's address with an address controlled by the malware creator. This means that when a user attempts to send funds, the transaction would be rerouted to the attacker's wallet without the user's knowledge or consent, draining their accounts. While this attack sounds alarming, the immediate risk is primarily for users of web wallets, especially those interacting with Bitcoin-related applications like ordinals or runes. Users of traditional software wallets might be safe if their wallet software doesn't rely on the compromised dependency or if updates haven't been pushed recently. Hardware wallet users are also generally more protected, but extra vigilance is advised. The compromised packages weren't exclusive to crypto. They were general-purpose libraries used across countless Node.js applications, meaning the scope of potential impact is broad. The danger lies in the supply chain of software development itself. A vulnerability in a common library can ripple outwards to affect many downstream applications, including those holding sensitive financial assets. This incident has sent shockwaves through the developer community, highlighting the ongoing risks associated with software supply chain attacks. Users are being strongly advised to exercise extreme caution. For web wallet users, it's crucial to double-check destination addresses on hardware wallets before signing any transaction. If you manage software keys directly within a web wallet, it's recommended to hold off on transacting until the wallet provider confirms they are not running a vulnerable version or have released a secure update. The safest approach is to await official announcements from your wallet's development team before making any financial moves. This crypto security scare is a stark reminder of the dangers lurking in the digital world. But don't let that worry you too much, because our next story brings some surprisingly positive news about the maturation of the crypto market itself. Bitcoin and Ethereum ecosystems mature amidst shifting regulatory landscape. As we head deeper into 2025, the cryptocurrency market is presenting a fascinating duality, with both Bitcoin and Ethereum showcasing signs of significant maturation, bolstered by evolving regulatory environments and increasing institutional interest. While Ethereum continues to hold its ground as the dominant smart contract blockchain, recent analyses reveal a complex picture. Despite Ether reaching an all-time high, protocol revenue saw a substantial dip in August, leading some analysts to question its fundamental strength. This decline is partly attributed to the Dencun upgrade, which significantly reduced Layer 2 transaction costs, shifting activity away from the mainnet and impacting fee generation. However, this perspective often overlooks the broader ecosystem's evolution. Ethereum's environment is benefiting from a more permissive regulatory stance, fostering technological advancements and attracting substantial inflows into spot ETH ETFs, even surpassing Bitcoin's outflows recently. Analysts like Tom Lee are bullish, projecting significant price increases for ETH by year-end, driven by potential surges in stablecoin issuance and the ongoing proliferation of ETH-focused corporate treasuries. The resilience of Ethereum is further underscored by ongoing upgrades and its strong position as a foundational layer for decentralized finance. Meanwhile, Bitcoin's ecosystem is demonstrating remarkable maturity, especially with increased institutional adoption and a more progressive regulatory climate. Supportive U.S. policies are echoing globally, encouraging corporate embrace of Bitcoin. Japan's Metaplanet, for instance, has aggressively acquired Bitcoin, positioning itself as a major treasury holder in Asia and highlighting Bitcoin's appeal as an inflation hedge. El Salvador continues its sovereign adoption strategy, commemorating its Bitcoin law anniversary with another purchase. These developments are occurring against the backdrop of anticipated Federal Reserve rate decisions, which analysts believe could further catalyze the market. While some consolidation is observed, driven by pre-priced easing and institutional profit-taking, the underlying momentum for Bitcoin remains strong, with its infrastructure rivaling traditional finance in maturity. The market is keenly watching the Federal Reserve's upcoming decisions, which are expected to influence risk assets like digital currencies. Analysts suggest that while a Fed rate cut could be a catalyst, subdued institutional flows and broader macro risks temper immediate optimism. Nevertheless, the underlying trends point towards a growing acceptance and integration of both Bitcoin and Ethereum into the broader financial landscape, signaling a new phase of development and stability for the crypto market. So, Bitcoin and Ethereum are showing serious growth, but that doesn't mean the challenges are over. We're heading back to that shocking lawsuit against Athena Bitcoin to get all the gritty details on how they allegedly profited from the elderly. D.C. Attorney General files lawsuit against Athena Bitcoin for exploiting elderly victims and deceptive fees. In a significant legal action, Washington, D.C.'s Attorney General, Brian Schwalb, has officially sued Athena Bitcoin, Inc., accusing the cryptocurrency ATM operator of a disturbing pattern of exploiting elderly and vulnerable residents through scams and deceptive fee practices. The lawsuit details how Athena's Bitcoin ATMs have allegedly become a primary tool for scammers targeting seniors. According to a 30-page complaint, a staggering 93% of funds deposited into Athena's kiosks in D.C. during their initial 5 months of operation were found to be the direct result of fraud. This alarming statistic highlights a systemic issue where the company is accused of failing to implement adequate safeguards and, worse, profiting from these illicit transactions. The complaint further alleges that Athena charged customers exorbitant, undisclosed fees, some as high as 26%, significantly higher than typical crypto exchange rates, and that these fees were embedded within the displayed exchange rate, leaving consumers unaware of the true cost. In one documented instance, a victim was charged as if Bitcoin was trading at $80,300 when it was actually around $60,000, resulting in a scammer profiting around $7,500, while Athena pocketed $2,500 in fees. Receipts from Athena machines reportedly do not itemize these fees, contributing to consumer confusion. Beyond the hidden fees, the lawsuit contends that Athena engaged in the financial exploitation of vulnerable adults and the elderly, violating consumer protection laws. The company is accused of failing to stop scams, charging deceptive and unfair trade practices, and denying refunds to victims. Even when refunds were offered, they were allegedly capped at $7,500 and required victims to sign away their future legal rights. The DC OAG argues that the language and disclaimers used on Athena's kiosks are overly complex and wordy, exacerbating the confusion and pressure created by scammers who often keep victims on the phone, instructing them to ignore the warnings. This makes it difficult for elderly individuals, who may be less familiar with cryptocurrency, to understand the process or recognize a scam. Athena Bitcoin has publicly stated that it strongly disagrees with the allegations and intends to defend itself vigorously in court. A spokesperson emphasized the company's aggressive safety protocols, robust consumer education, and multiple verification screens designed to prevent coerced transactions and ensure users own the receiving wallet. However, the DC Attorney General's office paints a starkly different picture, portraying Athena's machines as a lucrative, albeit illicit, revenue stream fueled by the financial ruin of its customers. This case is particularly significant given that Americans reported $189 million in losses from Bitcoin ATM scams to the FBI in 2023, underscoring the widespread nature of this problem. This deep dive into Athena Bitcoin's alleged wrongdoings is eye-opening. But before we wrap up today's episode, we'll give you a lightning-fast recap of all the top stories and tell you exactly how to stay connected with us. All right, Bitcoin Bulletin viewers, let's do a quick recap. DC Attorney General Brian Schwalb is suing Athena Bitcoin over allegations that their ATMs are used for scams targeting the elderly, and they're accused of hidden fees. Then, a major NPM security breach involving developer kicks could put your Bitcoin wallets at risk through a malicious JavaScript library. On a more positive note, both the Bitcoin and Ethereum ecosystems are showing incredible signs of maturation amidst a more favorable regulatory environment. And we got another look at Athena Bitcoin's alleged predatory practices and deceptive fees. That's a lot to digest, but we've got you covered. If you found this information valuable, please hit that like button, subscribe to Bitcoin Bulletin for your daily crypto news fix, and ring the notification bell so you're always in the loop. Also, follow us on all our social media channels for more updates and discussions. We'll see you in the next one.